But for the chemical sector, every time you want to know anything, just call up Ajay Joshi. He'll tell you which company is in which time cycle, what is the capex number, what will happen to which chemical price internationally, from caustic soda to specialty chemical. I mean, they're complicated names. I don't understand half of them. He understands almost all of them. There is a view in the market that most of the Indian companies, at least the basic ones, and semi-specialized companies are approaching what could be called as a growth curve. Capex is getting over and they're benefiting from what is happening with the China One policy. Is that true? Is the big picture that this is a good time for the Indian chemical sector or industry?
Yeah, good morning, Nikunji. Yes, we are reaching towards the upcycle and the growth curve for a lot of these Indian chemical companies. This was fueled because of the Trump tariffs, but I think we need to wait for 2 more months because in the previous quarter, a lot of front loading had taken place. So a lot of advance orders were placed by customers in the export market. So we saw very good growth. So I think we just need to be a little careful in this quarter. If this quarter Indian exporters, Indian chemical companies are able to sustain the volume and value growth, then our hypothesis would be proven that we are in the upcycle of the growth curve, and the whole China plus one thing has been working out in the favor of Indian chemical companies. So we need to just wait and watch this quarter numbers for our chemical companies.
So if you have to identify, and last time you did help our viewers identify some names. For example, I remember you mentioned Jubilant Ingrevia, that the capex was getting over. You mentioned SRF, it was doing a lot of good stuff in specialty chemical. Which companies to your mind are on a curve of incremental growth and which companies to your mind are on a cusp of transformational growth?
Incremental growth, Jubilant, Camlin, these names I took last time also, and I maintain my view. And then another company is TV and Keva, SH Kelkar from the fragrance domain. But PI industries also, there was a lot of skepticism with regard to PI industries. But the good thing that is working out in favor of PI is they have a customer called FMC for one of the product fluindapyr, which is a patented agro-technical molecule. Now, FMC has given growth guideline for fluindapyr in the US market. They have increased volume and value growth for this particular molecule in the US market. So we will see incremental revenue growth coming in for PI industries in this quarter and in the coming quarters. So PI industries is something which could surprise a lot of viewers here. So PI industries would be one such company. Another company which I think is moving towards a bit on the upcycle side is Epigral. Epigral is benefiting from government policies, anti-dumping duty on epichlorohydrin CPVC resin. So Epigral is also something in the import substitution play. They could gain a lot of volume and value growth. So PI industries and Epigral are something which are on this growth journey now onwards.
Ajay, the confusion has always been how pharma versus agro versus CDMOs actually stack up and what's a better opportunity right now.
The best opportunity would continue to remain in the agro CDMO space. In agri CDMO, most of the molecules are patented. Most of the intermediates are patented. So it's a high margin, high volume business. So PI Industries, SRF, Aztec Life Science, Naveen, everyone will gain in the agro space. In the pharma space, China has taken over because a lot of molecules are generic, which are off-patented. So in the pharma CDMO space, we would see some struggle coming in for Indian companies. Companies like Divis, companies like Aarti Drugs, companies like Syngene, we already have seen their margins getting shrunk. Their EBITDA margins used to be 20-24% 2 years back. Today, they are 15 to 18%. I expect them to go down further in the coming quarters. So pharma CDMO would get adversely affected. Their China plus one is not happening. In fact, US, which is the biggest customer, is also clamping down on India. They have made the remark that, we do not want to work with Indian partners. We need partners here in the US. So it is going to adversely affect the pharma CDMO, but agro CDMO, it's going to be a good time ahead.
Which are the companies you think in India, and I'm asking very basic questions, like almost elementary questions, who are claiming that they are doing specialty chemical, but they still do what are called as basic products?
This is going to get
This
me
will
into
get you
trouble
into
also because
trouble.
I
This will
work
get you into
with
trouble.
I work with these companies a lot, but see, companies like Aarti Industries is something they claim that they do specialty, but most of their products are commodity. Every time we hear the hue and cry about demand and supply, then companies like Lakshmi Organics, they also claim to be specialty, but a lot of competition is there in their product. Even Galaxy surfactant, they have also become commoditized. So much competition in their space also. So at least Deepak Nitrite, Deepak Fertilizer, these are all commodity companies which claim that they have some sense of specialty in their portfolio, but which is not there yet. They benefit when supply demand situation works in India's favor. That's the only time they make money. So yeah, these are some names. I can't take more names. It will get me into trouble. So
Thank you very much. And I hope you don't get into trouble because of this answer.
sure.
Okay. Next is a question which will not get into trouble. It will help you. Which is that which companies to your mind have genuinely moved up the value chain, who were basic companies but are now either on the cusp of becoming a specialized company or have already become one? See, this will get you a lot of brownie points.
See, one is of course Jubilant Ingrevia. 5 years back, most of their revenue used to come from a product which they used to sell at $2, $2.5 per kg. They have migrated into very high margin product, $40 per kg, $80 per kg, once aminopyridine and pyridine derivatives. So Jubilant has taken over that journey. They are yet to take the CDMO journey, but they have moved towards specialties in the value chain. Another good example is Aether Industries, which started with pharma intermediates but are now getting into oil and gas intermediates, agro intermediates. So Aether Industries is another good example in this domain.
Okay. Where do you think the entire China plus one framework is headed if tariffs are at play now? I mean, are there some chemicals which China was competitive, but because of tariff they cannot export to US, and by force or by choice or by compulsion that work or that industry or that chemical supply chain will move to India?
Agrochemicals, agrotechnicals, basically, they might move to India, but the problem is that, on China, the tariffs are 30%. On India, once the buffer period gets over, the tariffs are 26%. So only 4% delta is there between India and China in terms of tariffs. So we need to see how this pans out every day. Trump is changing their stance, so we don't know what is going to happen finally. But agrochem would be one such sector which would benefit a lot if tariffs are on place on China. So companies like Sharda, companies like UPL, companies in the agro CDMO, PI, SRF, everyone would benefit.
Ajay, so great having you on the show. Thanks as always for your time.
Thank you.
If you like this video, then like, share and subscribe to ET Now.